All right, we're back and we're live. It is currently 10:09 a.m. and it is Wednesday, March 11, 2026. And today I actually did take a job. Um, yeah, and I'm actually out early today from the charts, and I'm here. I'm out with the dub. But yeah, so I'm gonna do a quick little recap on what I was looking for here at Open. Okay, so first of all, we did have CPI news data to come out today. Loki, I was thinking about maybe full porting on another account potentially, but I ended up not doing so. Because I mean, honestly, I still have this account, but on top of that, Loki, I mean, even so, like today's candle, CPI candle is honestly not that good, so it's not gonna matter anyway. But yeah, I ended up not taking a CPI news thing. But yeah, okay. So no news at 10 a.m. or anything of the sort. But yeah, okay. So just quick little bias check here, right? So at open, I was a little wonky. I was a little iffy here, all things considered. Um, some things were a little bit funny for me here. Today. So very obviously on the higher time frame, right? This week we came down, took out this low down here, correct? And from there you can obviously see we have a very large wick here on the daily gap, on a daily time frame, and this new week opening gap we left behind got tapped into, filled in all the way, and we rejected from that on the daily candle as well. From there, we can obviously see we are obviously trending higher in this case, right? Inverting 4 hour gaps right here, forming 4 hour gaps, bullish gaps that is. And right here, even though we do take out this high right here, we have these relative equal highs sitting right here, as well as here on the S&P. And on the higher time frame, I generally want to align my entries with my higher time frame bias, right? So where is the draw on the higher time frame, right? Because we're trending higher and we're delivering from this low we took out initially throughout the week, or the filling the gap on the S&P, expanded from that zone. I'm looking for us to trace up higher to take out the draw liquidity sitting right above here, which is very obviously this swing high here, which we also left fairly equal highs with right here, right? Now, we obviously have these 4 hour gaps right here. What I was looking for us to take out, right? So once again, my bias is bullish at this point. I'm looking for longs, but honestly, because we had such a large expansion, I was hoping that we would retrace down here into this 4 hour gap, deliver from there towards a draw, right? So now let me actually go back into replay mode real quick, right? So let me just go here. Let's go to the 15 minute. Let's go back to replay. Let's go to 9:30 open. Boom. Right. So once again, we have these equal lows we left here yesterday on the 15 minutes. There's nothing really on the 1 minute, on the 1 hour. It's just these relative equal lows on the 15 minute we left yesterday, and this previous day lows right here, which is also the unmitigated 4 hour gap, right? So at open, right? I'm really confident in the fact that I want to see us obviously pull back to take longs. Once again, my bias is bullish. Then again, it could have flipped either way because it is also possible we could have shot up, maybe tap into the Asia highs and deliver away from that zone, taking out all these draws. I was a little fun, if like a little worried, kind of what the bias was, because we do have equal lows right here and this relative equal low we have down here as well, which I was hoping that we would maybe tap into at open and deliver away from. But instead, what we ended up doing at open is we began to deliver higher, right? Us delivering higher is a little funny because technically the overall bias can still be like bullish, but delivering higher generally suggests that we might begin to push back down. Um, and then from there we could push back up again, but it's a little bit weird. Nonetheless, I was looking for us to tap into these equal lows and the unmitigated 4 hour and then expand higher. Now, what do we end up doing? Let me just zoom in here, right? So right at open, right? So right at open, we begin to deliver higher, right? So 9:30 open candle, 9:30 open, 9:30 opens, and then we just begin to shoot up, right? So we have Asia highs sitting right above here. On the NASDAQ, on the S&P, we have London highs and Asia highs sitting right above us here too, right? My bias still remains bullish even if we don't trace all the way down, right? But there is times where we can just begin to expand, and then we want to rebalance later in the, like later throughout the day or later after taking liquidity out or so on and so forth, right? So at minimum, what I want to see us do is always, for me, I always want to see us pull back, right? I want to see a pullback in any given scenario. Ideally, it would have to be a pullback at open. That way I know, okay, we're pulling back into the zone and we want to reject from the zone towards a draw on liquidity, right? Which to me, once again, was all these highs basically here, right? These highs up here sitting up here as my draw on liquidity on the higher time frame. But like I said, at open, we don't pull back. We just begin to push up, right? Begin to push up. Eventually, right? We end up basically leaving relatively equal highs with Asia highs. We failed to take out Asia highs right here. On top of that, we end up forming this 15-minute gap right here. Get a 15-minute FEG sitting right here, right? 15-minute FEG forms right down here. On top of that, maybe as additional confluence, we do also have this SMT right here between the S&P and NASDAQ, right? So we take out this low here on the S&P, we deliver higher, and on here we don't, and we begin to deliver higher, right? The really big thing that was kind of getting to me was the fact that we left such equal highs above us here on the higher time frame, and on top of that, my bias was bullish, so I was looking for longs either way. So with this 15-minute being formed, I then wanted to wait for us to tap into that 15-minute gap right here, right? So at this point, I'm waiting, right? And in my mind, I'm like, okay, if we're truly looking for longs, we're going to want to tap into this 15-minute gap, and we're going to want to reject from this gap, right? If we inverse this gap, or if we see some stalling in this gap and we see wanting to push down, then it's probably not holding enough bullish pressure for us, right? So what do? We wait for this 15 minutes to get filled in. Boom. So right here, we fill in this 15-minute gap right here, right? 15-minute gets filled in. Additionally, for confluence, I'm looking at Fibonacci of this range, correct? Right. So we don't tap into equilibrium just yet here on the NASDAQ, but we do tap into equilibrium here on the S&P right here. So we tap into equilibrium, and we have a nice wick here on the S&P, which I'd like to see as well. More importantly, we do to also tap into this 15 into consecutive encroachment of this 15-minute gap, right? Now, this is where I did a little bit different from what I usually do. Generally speaking, I like to see a 5-minute confirmation of some sort, whether that's a CISD or an IFEG or a BOS, to tell me like, listen, we're looking to take longs off of this, right? But I've been doubting that idea lately, and like I said, I don't really have like a model per se. I can just observe the chart, and I just kind of try to piece things together, and I'm still trying to work on that. But I feel like maybe it's a little delayed sometimes, because in this case, if this 15-minute was holding, we wouldn't have gotten our confirmation of the 5-minute till later on, and my draw at this point is more likely than not these relative equal highs we left behind up here, if we're truly bullish, right? So we tap into this 15-minute gap. We respect consequent encouragement of the 15-minute gap. Equilibrium slash 0.6 to 0.7 the Fibonacci range on the S&P is holding, and we have an SMT on the low at the lows here between the two. And once again, we're also bullish on the higher time frame, right? With our draws being more likely up here than not, right? At this point, I'm zooming in already on the 1 minute, right? At this point, I choose to look for an entry off of this 15-minute gap on a lower time frame. Why? Because I feel confident enough that if I get an entry from this 15-minute gap, it more likely than not will deliver to my draw. The only thing that maybe I was wonky about is that we had just been shy of equilibrium of this expansion we had here. We just missed equilibrium here, which usually I like to use as additional confluence. And I have seen times where sometimes it does re-wick down into equilibrium and then deliver higher, right? So that was a little funny, right? But what I was looking for ultimately was a CISD, right? So I had this 1 minute CISD right here. I wanted to see us form, right? I like how we reject pretty strongly from this from consequent encroachment of this 15-minute gap. I like how we had a 1, 2, candle formation here, right here, and we break above this candle, forming a CISD, right? So right after I see the CISD delivering from a 15-minute gap with bullish a bullish bias and the drawn liquidity being above us, SMT at the lows, and equilibrium being respected on the S&P already, I'm like, I think this is enough for me to, even though I'm not waiting for the 5 minute, I think this is enough for me to be confident enough to take a long. So right here, I take a market order entry, and I want to see us deliver up towards Asia highs, which is the external draw. Also, another concept I like to look at is external, I mean, internal to external. In this case, we're tapping into this 15-minute internal gap, and then I want to see us tap into external liquidity, which would be Asia highs in this case, right? So right here, I end up taking, I believe, 6 contracts at market. I take a buy. My stop loss sits right down here at the swing low, and then my TP sits right up here at this Asia high. Right here. Boom. Confirm. I take my market order entry. From here, I let this run to see it do its thing. So market order entry at this level. We also do form a very small 1-minute BPR gap right here, which I'm hoping acts as what do you call it? As fuel to push upwards, right? I wait for this to get tapped into. Boom, it gets tapped into very nicely. On top of that, it gets respected, and right from this 1-minute BPR, we begin to deliver. I go break even the minute that this swing high gets tapped into up here. And once again, I'm just looking for us to deliver higher. So right here, I go break even at around what is it? Like right here, I believe. Like around here. I go break even, and I let it deliver up to my draw, and we do. We deliver to my draw, and this is a nice little 1.72 RR trade that I ended up taking. So I did end up making almost 850 on a day. Listen, from going from a drawdown, a pretty massive drawdown I had initially in the week, this little dub is pretty cool. But also because I didn't follow like my usual thing, it's a little iffy. I'm still working on what I should be doing, what looks good, what doesn't look good. Just trying to piece things together to find something that works for me is what I'm still working at. But this adds, I guess, more data to the idea. When I think about it back and right now, I mean, internal to external, draw liquidity is above us, so we're gonna be pushing higher, right? If we were to look to take sells, I would not have wanted this 15-minute gap to hold, right? I wouldn't have wanted this 15-minute gap to hold. I would want to see us inverse the gap. And in this case, we have a very nice wick here. Even in the 5-minute, we have a very nice wick here from consecrating encroachment of the gap. And then we have a very nice expansion like that we get here, right? So from here, I just take my entry. Everything here looks good so far in as far as I'm observing it. And yeah, so I ended up finishing the day at around 10ish, give or take. I believe this move happened, yeah, at 10, right at 10. So I was honestly in the markets for about 30 minutes only from open. Usually I usually do a chart a little earlier, maybe like 15 to 30 minutes beforehand. So but total market open time, I was only in there for like 30 minutes. I took a good trade here, nice RR setup, all things considered as well. And I am happy with the trade, but because of my lack of full understanding of a model or my model, it feels a little bit iffy, it feels a little bit odd. But I'm going to still try to work towards it. I'm gonna keep on back testing to try to find something that works and functions. But in this case, I feel like this felt kind of obvious to me in a sense. And as a matter of fact, let me actually look what it's looking at right now. Right now, we did reject off of Asia highs, right? We are delivering lower from Asia highs. We could very well be bearish, but even if it was a trend trade, I think it was still a good trade nonetheless. Maybe I'm wrong, so I'm always analyzing to make sure everything is in check. I don't want to. I want to be honest with myself. I want to be accounted for myself if I took a bad trade or not. For example, yesterday I took a break even trade. And then a lot of people took a trade off of the equal lows we left behind yesterday, without having taken those out. I did not take a trade, but I don't think it looked good, and I don't think it was good, so I did not take a trade, right? So that's I think 1 win and 1 loss on the week. But yeah, hopefully this week keep on being better, and yeah, see what happens. Deuces.